Okay guys, this is Alex again. Time for topic 2, which is how to use the retracement tool. Before I start, I'm not a financial advisor, I'm not a professional, and this is just for your edutainment only. So let's hide this text right here. We're going to start using the Fib retracement. You can find it right here, Fib retracement. Okay, let's hop onto the daily actually. And the Fib retracement. What is the Fib retracement? Well, that's different. This ugly color. Let's use the well, actually, let's use the white. I think it's more clear for you guys to use the white. So let's go to the settings. Yeah. So the Fib retracements has different levels, and these are all based on a certain mathematical formula. Okay. To really explain this, let's just go on to YouTube and type in Fibonacci sequence, and you'll see what the Fibonacci sequence actually is. Okay, so this is the Fibonacci sequence. It starts with 1, 1 plus 1 is 2, 1 plus 2 is 3, 2 plus 3 is 5, 3 plus 5 is 8, etc., etc. So if you use the mathematical formula, you'll end up with these numbers. Okay, and you could actually, I think you could, percentage wise, yeah, you could also put the settings to the percentage, and these areas are actually the most important ones. Okay, because this is called the golden ratio. The golden ratio is actually where if one line is 1, then the other line is 1.6, something like this. Okay, so where can we find this golden ratio? Actually, we can find it anywhere. We can find it in our face, we can find it on the leaf of a flower, we can find it everywhere in nature. Actually, everything that is, as believers say, created, that is where you can find the golden ratio. So, you know, as one might believe in God, he would say this would be the mark or the seal from Allah. Okay, so how do we use this? Well, as we said, well, let's just first draw something. Okay, so actually I use this Fibonacci retracement tools in accordance with the Elliott Waves. Okay, this is another topic to go in detail to, but typically if you have a retracement, which means that the price went up and now it's going down, which is called a retracement, yeah, or a correction, then the Elliott wave suggests this, that wave A would be to here, because this is where the price bounced, and then wave B would go to the golden ratio, and then the next wave typically, okay, so don't freak out, will be either to this line again or be as long as the wave A. So that would mean that the wave C would end somewhere around here. Okay, guys, this is typically, yes. However, we still need to figure out in which impulse wave we are, because you could say we are in, or you could draw these lines like this and go to the 1.6. Yes, let me just turn the value. Okay, yes, but this looks not like a valid Elliott wave actually. So first of all, I don't like this color, so I'm going to change it to black. I like black. So a typical Elliott impulse wave, okay, would be something like this. You will have a first impulse wave, which is this one, going to, actually I'm going to draw this without price action. A typical Elliott wave would be something like this, from 0 to 1, back to the golden ratio, and then up to the 1.6, okay? So this would be wave 1, wave 2, wave 3, and wave 4 is another correction wave, and wave 5 is another impulse wave. So you can use, no, I wanted this one. Let's place some lines here. Yes, okay. So you could, use these levels, okay? Typically, the price will bounce back to the 1.72 or the 1.4, which is around this level, and continue, okay? This is a typical Elliott wave. It can also be different, but this is a typical Elliott wave, yeah? But we will dive into that in another video. So let's use this Fibonacci retracement on the daily time frame here with price action. So there are two ways of drawing this, okay? You can either go from the low to the high, and you'll see that the price bounced back or retraced to this level, okay? So why would you want to do this? Because you want to know where you can buy back in. This is a buy-in opportunity. This right here is a sell opportunity, and this right here is another buyback in opportunity as a trader, okay? But you want to know where this price ends, right? Okay, then let's draw it differently. If you know, or if you think to know, that this was the first impulse wave, which started here, see the golden ratio, then the price will end typically, I'll keep saying it, typically at this level. And what do we see? We see that the impulse wave was corrected by a corrective wave back to the golden ratio, started the second impulse wave, which is wave 3, to the 1.6, okay? And now it got retraced back to the 1.27 area, and typically this will continue upwards, okay? So the area to look out for, if the Elliott wave will not be invalidated, this is the area you could, keep your eyes on. So let's not get too excited, because the price can also, or the wave can also be stopped right there. And then your Elliott wave will be invalidated and the retracement will start. Yeah? So how would we know where to go? Well, we first need to, First need to wait until this wave ends. But you can use your resistance lines and support lines to guesstimate, where the price will land, okay? And this is something that could happen. Yeah, this is something that could happen. As you can see, I used the theory that the corrective wave will bounce back to the golden ratio, okay, and will end right there. And these are, in confluence with major support and resistance lines. So is there anything I want to talk about considering the Fibonacci. Yeah, you can also use it on smaller time frames. Okay, so let's just delete all this. Hop on to, let's say, the 1 hour. Okay, and you want to find your, let's say, a major low and a major high, like that. Okay, so if we found out where the price ends or gets resisted by this resistance line right there, we'll draw an inverse fib. Yeah, 1 starting here and the 0 starting there. You can also actually draw it like this. Oh, that was the same. Draw it like this, and you'll see that these areas are exactly the same. Okay, why? Because 0.618 plus 0.382 is 1. As simple as that. Same. Okay, and you'll see that the price got retraced perfectly to this area. This area, and it could actually drop lower to this area. Perfect. And what does it do? It bounces back up. Okay, we can also see what it does. Let's see, where is mine? Out there. Okay, so we can also see what it does when, you know, using this line. Okay, so we just add some more levels right there, and you'll see that the price is getting supported by this area. It's not perfectly, but you know, the market makers need some weak hands to get shaken out. But as you can see, this is also a support line. Okay, so use your fib together with your support lines, and you will get along the way, you know, you'll be, I think, trading and making money. I mean, this is also a way of doing it. You will find your high and your next low. Yeah, so how do we draw this one? We put the 1 there, the fib level 1. We put the fib level 0 right there, and we will see where this area ends, and we see the price react to it perfectly and goes back up to what level? Another important level. Perfect. I mean, this is amazing. So you can go on every time frame. You know, it doesn't matter what price action you take. Let's just, you know, for example, do another one. As you can see, you know, depending on, wait, let me just take this one. Yeah, this is the normal price, I think. Yeah, like I said, this wick right here is just a market maker trying to make people lose money. So what do we see? A bounce to the 1.6, a bounce back to the support area, and whoop. So this is also a way of taking trades. Yeah, if you know that you have a support area right there. Yes, if you know you have a support area right there, because you know the price bounced. And of course, you need to use indicators that will indicate that the price will move back up. Let's see. As you can see, this is a divergence indicator. It shows you 10 different indicators, and at this point in time, it has shown us that 5 indicators of the 10 is giving us a bullish divergence. So, you know, using it with your stock RSI, your EMAs, you can get very far and trade effectively. Let's put this off again. And these are trades you could take: buy opportunity, sell opportunity, buy back in opportunity, sell opportunity, and yes, the price went higher. That's why you need more indicators, you know, to see what the best selling opportunity is. Okay, so thank you for listening. I hope it was clear, and I wish you all the best with your fib retracement.